So you found a nice gap, but how do you trade it? In this video, I want to take a look at this gap and talk about how to trade it. Welcome everybody. If you're new here, it's good to have you. If you're returning, welcome back. My name is Mel and I'm a day trader. I also do some investing on the side. So in this video, we're looking at the chart of Apple. We have a nice gap here and I want to talk about exactly how do you trade this gap and what do you do? Today is January 28th as of the recording of this video. We had a nice gap from the previous day's close. Previous day's close was right here at 308.90. I will draw a line where it closed. You can also look at the candle. If I hover over, you will see on the top left of my screen, we can see that the close was 308.96. Okay, this is the last 5-minute candle, and there is the close. Then, this morning, we opened up right here. We put a little tail to the downside, and we shot up. So how do we trade this? I want to get right into this and talk a little bit about what happened and how to trade it. So what I want to talk about really quick is the first thing we need to do is look at support and resistance. We closed here, we opened here, we have a huge pre-market, we have a huge gap between the previous day close and today's open. So the first area of resistance I see is roughly right about this area here. This is where price got rejected. Price got rejected once here. Didn't even make it to that line here. Came down, came back up to test it, made a lower high here, and then the third time is right here. So we have, so this area is a strong area of resistance on the previous day, which was the 27th. Now we actually gapped over the line of resistance. That is showing us bullish strength. So here's how you look at this. Let me zoom in. And here's what we're looking at. This is a 5-minute chart. You could see right up here on the top right-hand corner. Time frame is a 5-minute time frame. The first candle, you really don't want to do much. Sit on your hands, relax. Sit on your hands and relax a little bit. Let the market open to figure out if we're going higher or if we're going lower, right? Are we bearish or bullish? The whole time you're watching the market, we're asking ourselves who is in control, bears or bulls. And here's the breakout pattern I want to draw. So we start from here, we open here, we come up, we have a nice pullback over the next about 30 minutes or so. We have a nice pullback. Then we never break the low of this candle, right? This red candle never closes below the low. If we break the low of the opening candle, then we can assume that we are bearish, right? But we never break this low. So let me delete this. I want this to be very clear. We have our low. We open here, come up, pull back, and then we start curling upwards, putting us on a potential breakout pattern. And you see this green candle right here, and you see this large wick. This is a retest of this bottom here. So this is what's known as a double bottom. We come up here, create a double bottom, and then we take off. This wick is a confirmation of bullishness. We came down at one point, we opened here. We know where the open of the candle is. If you don't know how to read candles, check out one of my other videos on how to read candles. I will link it in the top right corner. So we open right here, we push down. At one point in time, this candle was red, and then buyers stepped in and pushed it all the way up here, and we closed here. This wick is showing us rejection of lower prices. So we open here, we come up, we have a pullback. This whole time we're watching the market trying to find a good entry. We have a pullback. Then as we start coming up here and we make one green candle, two green candle, put in a doji, we are on alert for a potential breakout pattern. Then we get this guy here. This is the confirmation that yes, we are about to have a breakout pattern. Will it do this all day? Not necessarily. It's not guaranteed. We don't really know. The market's going to do what the market's going to do. But this green candle here with this wick is showing us rejection of lower prices. And looking at it in context, one, we have a bullish gap in the pre-market, right? So this is telling us that most likely buyers are in control. It's never a guarantee, but most likely buyers are in control. So we come up, we form this 5-minute candle, go sideways and slightly down for a little bit, for about a half an hour. And then we start curling up. As soon as we start curling up, because of this gap, because we know that buyers are in control, we are on alert for a potential breakout pattern. And then we get rejection of lower prices, giving us a confirmation that the breakout is about to occur. So you see this candle right here? That is where you take the breakout. So how do we take this? Well, let's do entry, stops, and targets, right? So your entry can be here. It's a little bit of more of an aggressive entry because of this wick. This wick is a concern. If you're conservative, let me get rid of some of these lines. If you're a conservative trader, your entry would be above the high of this candle. So entry 1, right here. Entry 2, just over the high of the high of this candle breakout. So aggressive traders are getting in here. Conservative traders are getting in on this candle. Stops. Aggressive stop goes below the low of this hammer candle. It's not quite a hammer, but the tail is showing us rejection. So an aggressive stop will go here. A conservative stop will go below the low of the day, which is here. So if I was to trade this, we can come down here to active tools, and you have a couple of different options. You can use Fibonacci extensions, which is the better tool to use. I personally use Fibonacci retracements. It's just a little bit simpler for me, and I've gotten used to it. Let me delete this. I like to use this Fibonacci retracements, and all I did on the Fibonacci retracements was just added a -100 and a -200 extension. That's all I did. So if you go right click on it, edit properties. I have all these retracement levels, but basically all I did was added a -2 and a -1. You just type in -1, select your color, hit OK, and then I save as default. And this is a lot easier for me personally, is what I like to use. So this would be your target. If you were aggressive and your stop, you had an aggressive stop, I would put my stop here. Now your target gets shorter. And now that we know that our entry is here, aggressive entry is here, aggressive stop is here, we need to figure out the distance between our stop and our entry. So the simple way to do this is to figure out if I'm risking $100 per trade, this area, this $1.11 would be $100 for me. And 2 times my risk would be my target. That would be $200 for me. Okay, so if we know that our risk is $100, the price from our entry to our stop is roughly $1.10. You take $100, divide it by $1.10, which is the difference between your entry and your stop, and you get 90. That is the amount of shares we need to trade to risk $100, right? If, let's say, our entry was up here, second entry, and our stop was down here. Now the distance is a little bit greater. So we would figure out what is the price distance, the price difference between our stop and our entry. So let's put our entry at 314 just for easy math. 314. Our stop is at 312.40. So that's giving us $1.60. Okay, so then you take your same risk of $100, divide it by $1.60, which gives you roughly 62 shares. So if you had purchased 62 shares on your entry and your stop was here, right? And the stop loss, as we know, is if I'm wrong, this is where it would take me out. So if I'm wrong, the most I'm willing to lose is $100. So if we had bought with 62 shares here, if we're wrong, we lose $100. If we're right, we make 200. And if you had held this, let me just do this, extend it. And you would have had to hold it most of the day because this is on a 5-minute time frame, but you would have hit your target right about 2:15 or so. This is why I primarily trade the 1 and the 2-minute chart, where you can definitely do this. If you were a little bit more aggressive and your entry was here, it would have been a much quicker trade and your target would have been hit about 11 o'clock. Okay, I hope that helps. If any of this information was helpful to you, subscribing and hitting the like button will let the YouTube algorithm know that there's quality content in this video. If you'd like to see this video get recommended to more people, leaving a comment will help the algorithm do that. Leave me a comment below. I plan on picking some similar themed comments and questions to talk about in my upcoming videos. That's all for now. I'll see you in my next video.